Canopy Growth was just bought by Vanguard, Blackrock, and State Street, along with the National Bank of Canada and some other large asset managers. In this video, I will go through the things that you need to know about Canopy Growth, and then at the end of the video, I will give a price prediction based on technical analysis, and then just in a second here, I'll go over some short interest numbers. So with that being said, let's take a look more at the recent buys. So we saw the Vanguard group increase their holdings by 5%, which is definitely a good jump in shares. We also saw that MJ ETF, that marijuana ETF, increase their holdings by 35%. We saw the National Bank of Canada increase their holdings by 3%. Two Sigma Investments came in with a 7.9 million share buy over the past quarter. ETF Managers Group came in with a 8 million share buy over the last quarter. So it seems as if investors are kind of jumping in head first into this stock. And then, if we were to take a look at the BlackRock buys, so we saw a 9% increase at their the parent company of BlackRock, and then we saw a 2% increase in their iShares Core International Developed Markets ETF. And then for State Street, we saw a good jump in shares as well. So State Street, we saw a 4% jump at their Spider Portfolio Developed World ETF. So that's obviously a good thing to see that there. So State Street, Vanguard, BlackRock, the largest asset managers in the world, are buying more of the stock. Yes, a large portion of that buy is likely due to the decline in stock price, and those asset managers kind of right sizing their positions. But at the end of the day, it's good to see that these large asset managers haven't thrown in the towel on this stock, because usually when a stock gets very low in price, and it's obviously not profitable, those companies are subject to being delisted from the major exchange. Then they'll trade OTC, and if you trade OTC, you just really don't get that same exposure to the large passive managers like Vanguard, State Street, BlackRock. So it's good to see that these companies aren't throwing in the towel on Canopy Growth, which is a very good sign for the stock. And with that being said, though, let's move it to short interest. So right now we have about 6% of the float sold short, but that's not the number that's really intriguing to me and signaling a short squeeze. The number that's signaling a short squeeze to me is the short borrow fee rates. For those that don't know, this basically is when this is the number that a investor will lend out their shares for, right? So this is basically what a short seller will receive, or excuse me, this is what an investor will receive for lending out their shares to shorts. And so we have a 63% short borrow fee rate. For those that don't know, the average is about 0.3 to 3%. So to be at 63, to be almost 20 times that average borrow fee rate, signals that it's becoming very expensive to short the stock, which obviously could lead to some shorting pressures cooling down a bit, and could obviously cause a short squeeze for the stock. So this short borrow fee rate is implying that short sellers are having to pay up to short the stock. So with that being said, though, let's take a look also at QuantQuiver's rating of Canopy Growth. So they actually have Canopy Growth rated as the number 2 meme stock, and this is just an average rating between Wall Street Bets, kind of just retail chatter, and then failure to deliver, which is basically when a company doesn't deliver, or excuse me, a short seller doesn't deliver the shares that it should, right? And then they have 60 days to kind of fix that, or the SEC will come after them. And then it's also interesting to see that we did see some insider selling over the past couple quarters, but this is pretty typical of earlier stage companies. Obviously, we've been around since 2014, and the stock prices has moved drastically since then. So I mean, it's not super shocking to see some insider selling, but it is something that I at least wanted to cover on this video here, just so you're aware of it. So with that being said, short interest data definitely implying a short squeeze is somewhat likely for the stock. And then with that being said, let's talk about the recent news for the company. So Canopy Growth's stock has rallied nearly 50% based on the news that the U.S. Department of Health and Human Services recommends rescheduling cannabis to Schedule 3 drug, which just drops down its severity. And then the rescheduling of cannabis and the passage of the Safe Banking Act could lead to a larger cannabis stock rally and benefit U.S. multi-state cannabis operators. The news is good around, but the cannabis sector has been on a severe downtrend for over a year. Canopy Growth's stock price has declined 84% over the last year and 98% over the last 5 years. The question on the mind of investors is whether that this is the final dip and now we can start to buy as a new uptrend emerges. If the plant were to be rescheduled and the Safe Banking Act passed, then a much larger cannabis stock rally would obviously emerge. Canadian LPs will continue to rally on such news because most of them have U.S. cannabis entry strategies, including Canopy Growth. So that's kind of the recent news for the company. But with that being said, let's take a look at the financials for this stock. So Canopy Growth obviously isn't making money right now. The PE isn't positive, but we do have a price to book ratio of 1.23, which is actually below the sector median and below Canopy Growth's 5-year average. So on a 5-year average basis, the company is trading at a discount when you look at the price to book ratio. For those who don't know, price to book ratio basically just tells you what the market cap is relative to the book value of a company. Book value just being, the assets that a company has on its balance sheet, basically. So this tells you here that the market cap is 1.2 times the assets on its balance sheet. So decent number there. And then when we take a look at price to sales as well, so we have a price to sales of about 2, which is actually below the sector median of 3.7 and well below Canopy Growth's 5-year average of 28 times. So that signals both of these numbers signal that the stock is trading a discount relative to its own history and relative to the sector. Obviously, we don't have PE though. And then growth numbers aren't the best. We had a negative 15% growth rate for the past 12 months, and then for the next 12 months, we're projected to have a negative 7% growth rate. So yes, growth is negative, unfortunately, but at the end of the day, this growth trend is improving, right? We're seeing this drop in growth somewhat slow, so that is at least good. We're kind of moving in the right direction, but unfortunately, we are still negative on growth. And obviously, this is well below Canopy Growth's 61% 5-year average of growth. So, that's kind of why the stock is trading where it is. It's because that growth has really fallen off a cliff. Something that's been typical throughout the sector though, and I'll kind of compare all these numbers to the general marijuana sector in a second here. But we also see gross profit margin of minus 1.9%. For those that don't know, gross profit just tells you what a company makes for what it sells. It's simply just revenue minus cost of goods sold. So not a great number there, and obviously this number is well below the sector median, and it's actually well below Canopy Growth's 5-year average of 10%. So not something to kind of ride home about. And then cash per share though is definitely a decent number right now. So we have 64 cents in cash per share, and this is roughly about 45% of the market cap is in cash per share. So this kind of tells you that when you take away their cash holding, you're really only paying 76 cents for the stock right now, just given that cash holding. So that's definitely pretty good. And then with that being said, let's take a look at how these numbers compare to the general marijuana sector. So we'll start it off with the balance sheet here. Canopy Growth has $432 million in cash on hand, which equals to 64 cents per share, as I had said. And they have $856 million in debt, so they have $424 million more debt than cash. But this higher debt relative to cash is very typical throughout the sector here. We can see that Trulieve has $860 million more debt than cash. Green Thumb, $401 million more debt than cash. Curaleaf, $1 billion more debt than cash. So this is very typical. And, this business is somewhat capital intensive, so this isn't shocking to me. So it is worth noting, though, that they're the only company that has actually a negative net operating cash flow. So this kind of puts the company in a precarious situation because now they have to, fund their future operations, right? So they have a negative operating cash flow of minus $427 million for the past 12 months. So unfortunately, the company's going to have to figure out what they're going to do with their balance sheet. They're going to either have to issue equity or issue debt, one of the two, just to kind of get the company some more capital. And then with that being said, let's take a look at how the profitability metrics rank out. So unfortunately, Canopy Growth's profitability is minus 1.9%. Don't love that there. Unfortunately, this is actually the worst number out of all of the marijuana operators here. So unfortunately, profitability metrics rank out pretty poor. And then the 5-year compounded annual growth rate is also the worst out of all peers here. So unfortunately, the financials do look pretty grim for Canopy Growth. And then when we take a look at valuation here, so we can see here that the company isn't projecting to make money in the next 3 years, which is common, as the only company that's projecting to make money 3 years down the line is Green Thumb and Curaleaf. So kind of in line there. And then price to book ratio is actually pretty much in line with the peers. And then if we were to take a look at price to sales, we're basically in line with the peers as well. So all that kind of tells me that there is a reason that Canopy Growth has been underperforming all of these stocks, right? And it's because the balance sheet looks the worst out of all the peers. The profitability metrics look worst out of all the peers, and the growth metrics look pretty bad amongst all the peers as well. Valuation kind of in line, but it definitely makes sense from a kind of a fundamental standpoint why this company has grossly underperformed all the peers. But with that being said, rising tide, does kind of rise all boats, right? So if you're of the thought that the marijuana sector is likely to move higher, like I am, this stock could still offer a pretty decent opportunity. But with that being said, let's take a look at the chart here and give a price prediction based on technical analysis. So we've seen the stock rebound from 30 cents now up to about $1.50, but we're having trouble breaking through this 200-day moving average, which is about where shares had pulled back on Tuesday and Monday of this week. Unfortunately, it's where shares have topped out also today, so we may see a quick move back down to the 150-day moving average at about $1.15. But once that move is made, I do think it is likely that we could see a move up to resistance at about $2.05. This resistance level is where shares had bottomed in the past in July and in December of last year. Past support becomes new resistance. So that's kind of what I'm seeing for the short term. Let's say we're able to break through this 205 resistance level. Then I think we could see a larger move higher up to resistance at about $3.20, which is where shares had topped out in February and in July of last year. So that is my price prediction for Canopy Growth. I do think this company is a solid one, and it's in a great industry, right? So I do really think that there are some major catalysts for this industry, which could kind of be a saving grace for Canopy Growth. Obviously, the financials look pretty poor, though, and I do think there are some better opportunities, such as Curaleaf and Trulieve kind of being my two other favorites. And I'll link a video at the end of this video showing my top 3 stocks for the marijuana sector. So I hope you enjoyed that video. I will end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.